Greetings and welcome back to Mining Stock Education. I am your host, Bill Powers, and I have with me Dave Kranzler of Investment Research Dynamics for today's episode. And Dave is the editor, if you didn't already know, of the Mining Stock Journal, and he's also the co-producer with Trevor Hall of Mining Stock Daily Podcast. I asked Dave to come on to share with us some of his recent mining stock picks. Some of the feedback I've gotten from my past interviews with Dave is that listeners enjoy Dave presenting some of his picks and talking through why he likes the particular companies that he profiles for his subscribers to the Mining Stock Journal. So Dave, welcome back to the show. And how about we kick it off with an exploration stock? What can you share with us here?
How you doing, Bill? Thanks for having me on again. Well, probably my best insight is buy low and sell high.
Applicable to more than the mining sector, right?
Sure. I just wanted to say first off that obviously the mining shares are in a kind of a downtrend right now. It's gold and the mining shares had a tremendous run up over the summer, and I'm operating on the assumption that this is, aside from the manipulation issues involved, that this is going to be a healthy corrective pullback in the sector. And I think now's a good time to be putting together kind of a wish list of your favorite stocks. And I probably would maybe even start dipping my toe in the water now if you have cash to invest, or start doubling down if you are underwater on some of the names that you might have bought over the summer. So, but when you run up as quickly as we did between the end of May and say mid-August, late August, it's going to be natural that there's going to be a lot of profit taking, especially to the extent that hedge funds get involved in chasing momentum higher. So, at any rate, I thought I'd share a couple of the names that I've covered for a while in my mining stock journal. One of them it's called Precipitate Gold, and the symbol's PRG if you can trade on the Toronto Venture, or PREIF in the over-the-counter market. And Precipitate it's got a small portfolio of projects, but the one of interest to me is in the Dominican Republic. Now, they have another property in the Dominican Republic that's in an area where there's the local political jurisdictions have somewhat restricted the mining activities or exploration activities of a company called Gold Quest, which has it's like 2 or 3 million ounce gold mine that's just north of Precipitate's property. And they've put that project on the back burner, and they've had very encouraging drill results. They put it on the back burner until they waited to see how the political situation clears up. And it was kind of a shock, because the Dominican Republic generally is as a sovereignty is very pro mining. I mean, it hosts one of the largest and most profitable gold mines in the world, the Pueblo Viejo mine, which is a Barrick Gold Corp, so Barrick now Newmont joint venture. And that thing, I think it's got at least 20 million ounces of reserve resource in it right now. So Precipitate purchased a piece of land that sits adjacent in the DR to the Pueblo Viejo mine. And I spoke with the CEO pretty extensively about how they managed to get a hold of this property. And it's kind of a convoluted story, and it's kind of a small property. Because I was like, well, why wouldn't Barrick just buy that? And and just in case there's something there, because it would make sense for them in terms of the synergies even if it's only got 1 million ounces of gold on it. And I can't remember what the explanation was, but it kind of satisfied me. I think there was the people who had the rights to the land were pissed off at Barrick or something like that. I mean, you see that a lot. You run across that type of dynamic in Nevada also. But at any rate, so they've got this piece of land, and they think, and they've done a lot of prep work on it. They think there's a possibility that the mineralization system that has that has created the Pueblo Viejo gold deposit may also exist beneath the land that on the property that they bought. So they just got permits to put in some drill holes because they need to start drilling it. All of the early pre-drilling exploration work has encouraged them. They've identified some targets, and they're out right now raising some money to fund a drill program. And the stock is, I mean, it's in U.S. dollar terms, it's an 11-cent stock, and I think it's been down as low as 6 or 7 cents in the last year. And I mean, so you're looking at something that has about essentially a $10 million, $11 million market cap. And if they make some sort of discovery on this piece of property, I think the stock could easily triple or quadruple in a short period of time. And I mean, the way I look at it is let's just say they even find 500,000 to 1 million mineable ounces on there. I mean, it means that I would think that Barrick would be willing to pay somewhere between 50 and 100 million for something like that, depending on where the price of gold is, and depending on how amenable the metallurgy is of the ore. But I would have to assume that it shares a similar DNA as the ore and the metallurgy of the Pueblo Viejo mine. So it's a high risk, high return play. I mean, I wouldn't use any more money than you're willing to see. Like if you buy it at 11 cents and they drill out this property and it's nothing but dusters, the stock's probably going to go back down to 5 or 6 cents pretty quickly. So it's not going to go to zero because they've got some other, they have that other project, the Juan de Herrera project Herrera project in the Dominican Republic that could activate at some point. And then they've got, I think they've got a gold property in British Columbia. So there is residual asset value there if this they call it Pueblo Grande, if the Pueblo Grande project doesn't pan out. So for me, the way I look at it is, okay, if I buy the stock at 10 or 11 cents, I've got, 5 or 6 cents of downside, and I've got 50 or 60 cents of upside, right? So, you're looking at, an 8-to-1 or 10-to-1 payoff risk reward ratio there. And so, I think it makes sense to put a few dollars into it and see what happens.
I find it interesting how people discovered these investing opportunities. How did you come across Precipitate? Was it a recommendation or what was the genesis?
A colleague of mine was familiar with it. I've been following it for, I don't know, probably 2 or 3 years.
And then you just now took a position in your fund as well?
Oh, no, we've had a position in my fund for a long time. I mean, our cost basis in it is probably 8 or 9 cents. So, and it's an underweighted position. And, when they start rolling out drill results, once they get the drilling going, and if the drill results look encouraging, we'll add to it. I don't care if I have to pay more, like 15 cents or 18 cents to buy more shares. As long as, if they have encouraging drill results, to me, it removes a little bit of the risk. I mean, it's still going to be a high risk situation until they can, go through a couple different iterations of drill programs. But, I've left plenty of room to add to the position. And if it doesn't work out, I haven't put enough into it so that I'll be bummed out if I have to write it off.
And you shared with me another stock that you've been profiling is Ely Gold Royalties. I've met with the management of this team over the last 2 years at numerous conferences to get updated. So this is a stock that I've followed at a distance. What's your thoughts on Ely Gold Royalties?
Yeah, so someone I know in the business was bugging me for about a year to look at it, and because I had looked at it on a cursory basis maybe a year ago, and I generally do not recommend, or not necessarily recommend, but invest in royalty companies, just because I like the high risk, high reward nature of the juniors. Or if there's a producing company where the stock gets hit, and I think the stock sold off unrealistically, and it's, to me, it's a, if I look like you can get a low risk 20 or 30% bounce in the stock because it's oversold, that's the type of opportunities I generally look for. I did buy and recommend Sandstorm back when it bought Mariana, the Turkish gold copper project, and because Sandstorm, I think it was all stock, might have been a little bit of cash, but the stock just got annihilated in it. And so I put it in my mining stock journal at $3.20 and put it in my fund at the same price. I sold it after it had about a 40 or 50% bounce. And obviously, looking back, I kind of wish I held on to it a little bit longer. But so that's generally, the point there is I generally don't invest in royalties unless I think there's a really good opportunity there. And so I finally listened to the Eli story at the beginning of October, and I was like, this guy's got some incredible royalty properties, and he's got a huge portfolio of potential properties that can be optioned off, and in which they retain a royalty interest on it, or just sell it outright. And I just, when I look at it, I think it's undervalued relative to what it has and what's coming online.
And it's run up. I believe Sprott did a financing several months ago, and I think like May-ish it was at 16 cents Canadian, and now it's up. It's been over 40 cents. So even after the run up, you still find good valuation here.
Well, you're probably looking at the Canadian dollar price.
Correct.
I transact in the U.S. and not on the TSX, so I generally look at the dollar price, the U.S. dollar price. And the guy who told me about it, I was like, geez, I wish I took a look at this when it was at 14 cents, and it's at 26, 27 cents U.S. And that's about where we bought into it. And when I look at it, I think there's some, maybe the market is somewhat valuing fairly the royalty properties that are it's getting paid royalties on right now. But some of these properties, like they've got a royalty on a Walbridge mining, the Fenelon mine, and that royalty is it sounds like it's going to go into commercial operation in late 2020 or early 2021. And I think that mine's going to be a cash cow. But what's interesting about it is that Eli's royalty footprint extends over the property area where Walbridge is currently exploring, and which will likely add considerably to the size of the resource. And Trey Wasser, the CEO, told me that he thinks he had heard that that's why Eric Sprott was interested in investing in Eli, was for exposure to that particular area. So there's, again, it's, you don't want to say anything's a sure thing, but to me, there's good probability of a big upside bump to the value of Eli's royalty in that particular property.
If I could just interject, though, the one thing I love about the royalty model is what you just articulated, is that you get what the royalty companies call free upside without the downside or dilution that comes with your standard 100% pure explorer. And I believe it was Pierre Lassonde that's how he was able to grow Franco-Nevada. It was through purchasing a royalty, and then through the subsequent exploration success on which he had a royalty, it just became a cash cow for him, and that's how he was able to grow Franco-Nevada into a multi-billion-dollar royalty company.
Correct, and he did it early in the game, so he was able to buy a lot of assets very cheaply relative to where he would have been able to purchase those assets now.
Yeah,
there's a lot more money chasing those types of situations, and that's kind of what I like about Eli. I mean, they're kind of small and they're not competing for the marquee properties or marquee potential projects, and they're looking for really good value investments in kind of smaller, off the beaten path properties. So, as an example, another asset that caught my eye in their project portfolio or asset portfolio is they have a royalty on land that is next to Core's Rochester mining complex down in Nevada, and that's Core's most profitable mine is the Rochester complex. And the reason why I know about this particular property area is because Rye Patch Gold used to own it when Rye Patch was around, and then they got into a big dispute with Core over the situation, and ultimately it led to Core buying out Rye Patch specifically for this property. And it's the area is the Lincoln Hill area. And I know that Rye Patch felt like there was a lot of silver beneath the ground on this property. And so that's the area where Eli has this NSR. It's a 1% NSR. And it sounds like Core is probably going to start producing ore from this area in late 2021 or 2022. And Eli paid $450,000 for this royalty. And, assuming it starts producing ore, I mean, that royalty is going to be worth several multiples what they paid for it, especially if the price of gold and silver does what we think it's going to do.
So this is a multi-year hold for your fund then? Is that how you're looking at this investment?
I mean, when I look at it and I kind of compare it to Abitibi royalties or Metalla, and I think it's a much better risk return opportunity relative to those two names. I know Metalla's, I've had several subscribers ask me about Metalla, which tells me someone's out there promoting it or several people are out there promoting it. And I took a quick look at it. I didn't really take a long enough look at it to see, whether I thought it was a really good idea or not. But I took a look at it long enough to decide that Eli was cheap relative to Metalla. So, I mean, Eli is something that, a lot of the really, I mean, it already has two producing properties. So it's got cash flow coming in. And over the next 2 or 3 years is when a lot of action could really start happening in its portfolio. And so, I'm going to hold it for at least a double or a triple. And that, whether that takes 6 months, a year, 18 months, whatever, that's what I see coming down the pike for Eli. And again, it's relative to the high risk of something like Precipitate. To me, it's a relatively low risk. The downside is if we're wrong about the price of gold and silver and gold and silver go back to where they were, a year ago, or, and to me, that's the downside risk on it. And the upside risk is at least 2 to 3 times the downside risk on it.
And the last stock we'll profile today, this is a producer with development and exploration projects, but it's sold off recently, hasn't it?
Yes. It's Fortuna Silver, which I was somewhat familiar with it. Again, I don't really focus on the large caps. I have the ones that I watch to see if they get beat up, and I'll buy them for a short-term trade. But I mean, this stock was over $5 a year and less than a year and a half ago, and there was a couple stocks now it's just under $3, and there were a couple catalysts that led to the sell-off. Part of it was just the general decline in gold and silver that occurred between a year and a half ago through May of this year, right?
Mm-hmm.
And then they also, when they released their second quarter earnings, they got hammered, and they got hammered because the operating income, I think, was, again, this is off the top of my head, but I think operating income was sliced in half, and part of that was because the price of silver was so much lower relative to the second quarter of 2018. But also, one of their two producing properties is it's silver, lead, and zinc, and lead and zinc have gotten hammered over the last year. So those factors are why they had horrible comps versus 2018 for their second quarter. Now, fast forward to the third quarter, and they're going to have great comps versus the third quarter last year. And I don't think the market is taking that into account right now. Obviously, the price of silver was substantially higher than the price of silver was in the third quarter of 2018. Lead and zinc are, again, off the top of my head, I think they're about the same. But, I think they've taken the brunt of we're going into a global recession hit. And to be honest, I'd rather be exposed to lead and zinc, especially zinc, than I would copper assets right now. So that was one factor that hit the stock. A second factor was, so they've got a property down in Argentina. It's the Lindero project, and it's going to be an extraordinarily high margin gold mine that is targeted to commence operations in the first quarter of 2020. So we're, 4 or 5 months away from that thing starting to pour gold. And it's going to do on average, about 100,000 ounces of gold a year over a 13-year mine life, with an all-in sustaining cost of $750 an ounce. And part of that is because it has a very, very low strip ratio, so it's cheaper to process than a lot of gold ore. And there's also tremendous exploration upside on the property. But they issued a convertible security that represents, if it ever gets converted, about 5% of the equity. And the reason why they issued it was they needed the capital to get Lindero over the finish line. They needed it for, the ongoing expenses of starting it up, plus working capital needs. So, the market, for some reason, with the mining stocks, as you know, Bill, whenever a mining stock issues shares or does a convert, the stock gets hammered. Any other sector, especially technology stocks, when they issue shares, it's seen as a great thing, and the stock goes up. So this particular one, it was the convert price is $5, and the stock at the time was around $3.30 when they announced it. And so you would think the market would be happy that, in effect, they're selling shares at $5 a share when the current market price is $3.30. But no, market sold it off. They didn't like the news. And then the third factor is this Lindero mine is in Argentina, which obviously is there's some political uncertainty surrounding the upcoming presidential election, and it's pitted a populist with a socialist as his running mate, the former president of Argentina, Cristina Fernandez de Kirchner. And, the markets aren't happy about that because he's the front runner now. And I've spoken to a couple different guys about mining stock executives about their thoughts on how that whole thing's going to play out if Alberto Fernandez wins the election. It sounds like, he's running on a populist platform, but it sounds like he's also pragmatic, and he knows that in order for Argentina to get back on its feet economically, it has to promote economic policies that encourage foreign investment in the country. And I didn't even know about this till I spoke to someone about it yesterday. They're trying to develop shale oil, and they need a ton of capital for that. And if they were to impose, capital controls and impose high taxes on businesses, they're not going to get the capital they need to get their shale oil going. So both guys I spoke to sounded like, it's sort of like, well, we got to wait and see, but we're encouraged by what we've heard about this guy, and encouraged by the fact that we think he knows that he's got to be pragmatic when it comes to economic and business regulations. So at any rate, those were the three factors that drove the stock down. I mean, it went from between like March and the beginning of July, it went from $4.40 all the way down to $2.40, and it's bounced since then. And it's come off again as the election approaches, and the convertible was sold, and I think at this price point it's a good value. I think it's, again, they've got two producing properties. They produce a lot of gold and silver. It makes money, and I think the market is underestimating how profitable, assuming the political situation doesn't cloud the picture there. I think the market's underestimating how profitable this Lindero property is going to be.
Dave, from a fundamental analysis perspective on this company, sometimes in mining, as you know very well, things don't work out. We saw Tahoe's Escobal mine, in Guatemala, still not back in production. So you could have this tremendous resource that could even be in production, and all of a sudden it could be stolen from the company or disallowed to be continued, which is obviously going to affect the valuation of the company. If you just totally write off all of Fortuna's Argentinian assets, do you still think it would be a good buy at this price point?
Probably not. I mean, I think it would get hit if something were to cause the market to completely discount Lindero. I think it would probably lose about another 50 to 75 cents from here. However, they do have the two projects that they have. Both properties have big exploration upside, and it's got other assets in its portfolio that it can develop. So, again, I don't normally invest in producers, but I invest in them when I think again, you're right. There's some risk here, but I think you'll be compensated. The potential bounce back on this stock will more than compensate you than the risk you're taking at this price level that Argentina turns out to be a bust, which I do not think it will. But, and the flip side is here, if you buy the stock at $3, it could easily snap back to $4.50 or $5, especially when gold and silver resume their upward bull trend. And so, for me, an opportunity to make that kind of return on a large cap producing stock is I can't pass that up.
And so you just recently initiated a position then in your mining stock fund in Fortuna?
Yes. In fact, our cost basis is higher than where the stock is right now.
And that was a recent profile, of course, in the Mining Stock Journal as well.
In the Mining Stock Journal. That's correct.
Yep. And the Mining Stock Journal, for those that don't know, if you want more information, go to Dave's website. It's investmentresearchdynamics.com. And I believe, is it still only $20 a month, Dave, to be a subscriber?
$20 a month, and the only time commitment period is the first month.
Right. So it's a $20 risk, which is what, 4 Starbucks coffees?
I mean, I bet you 2/3 I started this up in March 2016, and I bet half of my subscribers were subscribers within the first 6 months. So I thought I was going to have a much higher turnover rate. So, I think it kind of speaks to, what people think about my ideas.
All right. Well, Dave, as always, I appreciate your insights. Thanks for sharing with my audience. And again, to check Dave's website, go to investmentresearchdynamics.com. Thank you very much, Dave.
Thank you, Bill. Great chatting with you again.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.